Welcome to PwC IFRS Talks, your source of all things IFRS. Technical accounting matters, business issues, current standard setting and regulatory updates. I'm your host, Ruth Preedy. In today's episode, we're going to do 6 months in review in the life of Dave Walters. Welcome back, Dave Walters.
Thanks, Ruth.
What's it like sitting on the other side?
I had forgotten what it was like sitting on the other side, so I don't just get to ask a few questions. I actually have to answer a few questions.
Are you saying I've got the easy job?
I am indeed. But welcome back.
Thank you very much. So do you know what I found while I was off though, Dave? It's hard to keep on top of IFRS and all the different things that are going on at the board and the IFRIC when you've got something else to do. I obviously didn't have, I had a different job that was bringing up a baby. Yeah. But it's hard to keep on top. So I do love the podcasts.
Excellent. I'm pleased to hear that you love the podcasts. And, whilst you've been bringing up your cost centre, as I think I would refer to them.
Definitely a cost centre.
Staying involved with the world of accounting is important. And actually, you might think that with the board having sort of finished the big four projects, that it would have been quiet, but no, I found plenty to talk about.
You did, and you got out, I think, 9 podcasts.
I did.
Whilst I was off. That's amazing. And so, if there's anyone who hasn't had time to listen to all 9, we still think you should listen to the 9. Yeah. But this is going to give you a sparkling gem for each of those 9. I said, Dave, I'm going to ask you for a gem from each.
Right.
And he's come up with about, we've probably got 2 hours of material, so I'm going to try and keep him to 20 minutes.
Sorry.
So, podcast number 1 was on IS12 tax. One of your favourites. What was the little gem you shared with us and Tony?
Well, I think the little gem there was the realisation that standard is 40 years old. Ooh. And it's now into experiencing
older than me.
It's a bit younger than me. It's experiencing middle-age spread, which rather like anyone who's experiencing middle-age spread, it might have been a standard that was based on an underlying principle, but we've had 40 years of excess eating pies adding to it. So we've essentially added a whole load of exceptions, and that's what's made IAS 12 actually quite challenging to apply in practice. And the bad news is there's kind of no end to the little extras. So one of the things we discussed is that the new leasing standard has implications in respect of IAS 12. So for those who are applying IFRS 16, you need to have a think about the tax base of the asset and liability you're recognising, because it might not be straightforward.
Yeah. IS 12. Yeah. Is this the gift that keeps on giving? Or there's many standards of gifts that keep on giving?
It is, and it continues to be a favourite review focus for regulators. So make sure that the disclosures on uncertain tax positions are clear. And if you've got deferred tax asset recognised on losses, again, that's something to watch as we go through the current cycle.
An amazing first gem to start with.
Amazing first gem.
Then we had Carsten.
Yes.
It was his first IFRIC.
Yes.
And we thought, rather than let him have a nice time, we're drilling with questions straight away in September. What do you think? What was one of? I know there must have been loads of topics, but let's just choose one. Go for one.
There were loads. I think probably the one that generated the most interest at the time was a revenue question. Actually, accounting for compensation for delays, and if you're flying with an airline and for whatever reason the airline can't take you from A to B, it might take you from A to B, but your luggage from A to C. But in this particular instance, it's compensation paid by the airline to their customers for delays. And the question the Interpretations Committee was asked was, well, in many cases, the compensation might actually be a very substantial part of the ticket price, or indeed more than the ticket price. So what do we do? Yeah. And the Interpretations Committee essentially confirmed the underlying principle that compensation for delays is essentially still compensation to your customer, and therefore its payments to customers get deducted from revenue.
Wow. Okay, so an important one. Then we moved on, and you decided, we'll talk about IFRS 17.
That's right.
I haven't listened to all of that one. Only joking. IFRS 17, but for non-insurers.
Yes.
And there's an important message in this one.
That's right. So the important message is that you might think that a standard that deals with insurance accounting is for insurance companies.
Yeah.
But actually this is a standard that deals with the accounting for insurance contracts.
Oh, no.
And insurance contracts can be issued by companies that are not insurers. Yeah. They might not necessarily know they have issued an insurance contract or realise they have, but they have. So that particular podcast went through a few of the pitfalls to look out for. And insurance contracts might be in a number of issued in a number of forms. So if you're a hotel management company and you have decided to guarantee a level of EBITDA for the companies for whom you're providing your hotel management services, well, that's an insurance contract.
Yeah. Wow. So I think this is a good one for if, like me, you saw insurance and thought, I don't work in the insurance industry. Don't do it. Listen to the podcast and we'll give you lots of examples of other contracts that you maybe don't realise are in the scope.
That's right. So it is worth having a look. Performance guarantees might also fall into the scope of an insurance contract, or extended guarantees that extend to products or components actually not sold by the entity. If you're effectively giving some sort of guarantee for something that you haven't sold, then again you might be caught.
Up in it. And then you've got some of my old friends back.
Yes.
Chris, Sandra and Mark to talk about IBOR reform, which is the fastest standard setting action I think I've ever seen. Yes,
absolutely. And this is the standard setters responding extremely quickly to a potentially very problematic issue. So the replacement of IBOR with whatever is replacing it. If you've got hedging transactions in place that reference IBOR, well, they might become less than highly effective if you've replaced the benchmark.
Yeah. So
this amendment was essentially to say, we know that this issue is coming. We will give you some relief from the impact of essentially replacing one interest rate with another, subject to certain conditions and lots of disclosures. But they raised
that makes a change.
Well, indeed, lots of disclosures is important. But this was raced through the standard setting process. It was raced through an endorsement process, so companies could early adopt.
And I should say that's IBOR reform part 1.
Yes.
And we're imminently waiting part 2.
We are indeed.
We'll have to have them back.
We will.
More
that's right.
More
that's
juice
right. You can
do my podcast.
You've already got one
in the library.
I
can't say Chris's surname very well. I think that was my issue on the last one. I was like, did I say it right? Chris is like, no.
But Chris is as a sort of deep treasury expert, sort of seeing the companies at the business end of this reform, and I think it's fair to say that for sort of banks and the more advanced large corporates who deal with have got significant treasury functions, they're on top of this. It's some of the smaller entities that are struggling.
Yeah, keep an eye on all your contracts. Spot Control F. See if there's
absolutely.
Okay, then you were joined by Pete Hogarth, and always a topical one, especially around year end. If you're still doing your year ends now, regulator focus.
Yes.
Care what our regulators are looking for.
Yeah, so actually we talked about regulators in the UK who had just issued their annual report, where they've kind of very helpfully highlighted here are the areas that we found that have gone a little bit awry in reporting in the last 12 months, and here are the areas we're going to continue to focus on. But we also obviously have feedback from the European regulators too. And actually,
they tend to bring out their reports about the same time.
They bring them out at the same time, and actually there's a strong overlap.
Yeah.
So number one issue, again, is the disclosures of accounting judgments and critical estimates. So the regulators are focusing first of all on people making sure they distinguish between what is a judgment, should I consolidate this entity or is it a joint venture, and estimates, estimation uncertainty, and for example your impairment testing. And the regulators focusing in particular on critical estimates where there's a risk, it's reasonably possible in the next 12 months that your estimate will move materially. then there's a strong encouragement in the standard and even stronger encouragement from the regulator to quantify that in some way, shape or form, whether it's sensitivity analysis or the range of answers or whatever. And they have written to a lot of companies in the last 12 months, having reviewed previous years' disclosures to identify where some numbers, numerical analysis might be missing. And in fact, for some companies, they have responded by saying, actually, these estimates that we've disclosed weren't actually critical. They wouldn't. It's not reasonably possible they would move in a material fashion. In which case, the regulators are very clear to say, well, you should distinguish very clearly between those that are critical, where we expect all these disclosures, and those which are not critical, but you're giving some additional information. That's fine as long as it's kind of clearly labelled that these aren't critical.
Yeah, okay, important one there, and one I think that's been on their agenda for a while. So
it is
the fact that they're hammering it home again.
Yeah,
that's even more important.
Actually, if I can get a second gem in on the regulators,
go on then. You can have two sparklers.
We've had 4 new standards.
Have we?
We have.
I haven't missed that one.
We have, and we're beginning to see now people issuing their annual report and accounts with IFRS 16. People should make sure that all the disclosures there are complete, and we know the regulators will be looking at them. They also continue to ask questions on the IFRS 9 and 15, so there is a focus on disclosures around new standards, so be careful.
Okay, so still looking out for those as well. Thank you. So then we had Carson back.
Yeah, we did.
His second meeting, November. He's warmed up now.
Yeah, he's warmed up, which is a good job.
Go on, give me one topic from that one. Oh, look, he wants to. I can tell he wants to.
Okay, I shall actually give you one topic. I shall confine myself to the topic of football, which was a controversial topic for an Englishman and a German to be talking about, to be perfectly honest.
It was. Who won?
That's right, went to penalties, and you know the result at the end of that.
Maybe we should skip over that.
But the Interpretations Committee had been asked a question around the accounting for player registrations and indeed transfers, which proved to be very controversial in that there was an expectation, I think, that the Interpretations Committee might conclude that essentially it's a disposal of an intangible asset and therefore doesn't form part of revenue. But they actually said that you need to focus on the business model of the football club. Is it? Essentially, are they the sorts of kind of breeder clubs that exist to train players on and trade them on? In which case, this might be actually part of their revenue activities. So that's proved to be quite controversial, as indeed many things are in the world of football.
And one thing I would say about that, and this probably goes back to the insurance point, like the title is sometimes a bit not misleading, but as in I'd read that and think, well, I'm not looking at any accounts in the football industry. I don't need, but obviously it's just about disposal of an intangible.
It is,
and whether it goes in revenue or not, and is it could an intangible be inventory? So it's quite a big, far-reaching topic that I would say is not just in the football industry.
Yeah, so one of your favourite industries is pharmaceuticals, where you might have a look at that agenda decision. So that was the IFRIC.
Now then, you sneaked in. I think we did it last year, didn't we?
We did.
We played Top Trumps. Did you play Top Trumps?
We did not play Top Trumps.
I still love the IFRS Top Trumps. Tell me about the Christmas special.
So
Was Santa here?
Well, in the form of Gary Berkowitz, yes. So given that Christmas is the season of goodwill, we thought we'd talk about goodwill accounting.
Oh, that's good. I thought it would have been about revenue. Yes, if you had Gary.
And rather like Christmas is past. We went through the history of goodwill accounting as well as the proposals for the future. And I have to say, every time the topic is discussed, I'm hearing a louder and louder mention
ho
ho of the amortization of goodwill, which is definitely on the cards. It is something that the ISB are expecting to progress within the next 12 months or so, and we wait and see how it turns out. But I think goodwill amortization might well be
back to amortization. Wow. And then, because you enjoyed your podcast with Gary so much, and for those people that don't know, he's moved to the UK, so it's easier for us to corner him in an office. You had him back to talk about alternative finance arrangements. That sounds juicy.
Yeah, alternative financing. So it's where financiers provide finance, but what they get back isn't just a simple loan repayment. It might be a share of a portion of future output.
Yeah.
So we can do the debit entry quite easily. There's debit cash.
Yeah.
Where does the credit
Where
go?
does the credit go?
And the credit might well be in the scope of IFRS 15.
Yeah.
And if the credit is in the scope of IFRS 15, then we've got all sorts of challenges around when do we recognise it, and what's the, what if we remeasure? How does that get accounted for? Yeah. So it gets very complicated very quickly. We've
seen don't all end up just in financial liabilities.
No, it doesn't. In fact, there may be no liability there at all.
Yeah.
But you could have revenue being recognised over a very long period, being remeasured every year. So it could get very, very complex. So we've seen these in pharma, mining, and litigation funding, just to name but three. So.
Yeah. So that's an exciting one for people that haven't listened. And then. Oh, God, this is exciting. I listened to this one and I loved it. You had Catherine in from the ISB.
Yes.
You've got to get her back.
Absolutely.
She's a natural podcast queen.
She is an enthusiastic proponent of all things leasing.
I follow Catherine on Twitter and she's always got little things that say, I love IFRS 16.
Oh, well, indeed. I've got a
Badges
badge.
Yeah.
So I've got the I love IFRS 16 badge.
Yeah.
He's actually currently sitting at home around the neck of I've got a very small bust of the Emperor Augustus. Because, as you should know, the Emperor Augustus...
As I should know.
The Emperor Augustus was probably the world's first rather well-known accountant.
Oh.
So when he was on his deathbed...
You can tell I don't know this.
When he was on his deathbed,
yeah.
he did so unusually, perhaps. He summoned one of his principal aides and gave him a list of his assets and liabilities.
Oh.
So most of us, when
said,
we're on our
where's
deathbed,
my IFRS 16 badge?
so as probably the world's first and a very great accountant, I thought he should wear the badge, which I think is important. I mean, the Emperor Augustus, you can just imagine as an accountant, he would be talking to his aide to come rushing in, saying, we bring news of the Battle of Actium, where we have an impairment trigger. Yeah. And he'd be asking, well, why? Because 300 boats from the bottom of the Aegean Sea. It'd be marvellous. But anyway, so Catherine was here talking about leases. Yeah. She confirmed actually there's already quite a large number of questions for the Interpretations Committee. Yeah.
We're seeing that come through already.
Yeah, Carsten had that in November when looking at the incremental borrowing rate, which is based on the sentence with the largest number of the uses of the word similar in the English language. So they can confirm that, and there's a lot more
stuff on lease term, I think.
Yes, lease term, which has been quite controversial as well. So the lease term, one of the things the Interpretations Committee have essentially drawn attention to is that when you're considering the lease term, you should think about economic compulsion or the wider terms of the contract, and sort of significant penalty ought to be thought of in those terms. So that particular decision came out late in the year and caused some difficulty in practice. So the Interpretations Committee will have more to look at over the next 12 months. It was a fairly confident prediction from Catherine. Yeah. And disclosures are proving A, useful, and B, a challenge. Yeah. So
back to your regulator point.
Back to the regulator point. They'll be looking at it. So yes, plenty. We talked about plenty there. And rather like this one, we could have gone on for hours. Yeah,
I know, but we've done so well because that was 9 podcasts. So effectively, you've caught me up on 6 months of IFRS in 20 minutes. That is pretty impressive. I can go back and have another baby. I don't want one. Two's enough.
That's late breaking news for your husband.
He won't listen to this. He's not an accountant. Okay, so thank you very much, Dave.
My pleasure.
You've been amazing while I've been off. If you ever want to come and do some guest presenting.
It's been a treat and I look forward to being invited back.
Of course. And for anyone that wants more information, obviously there are 9 other podcasts to listen to. Great to listen to while you're walking in the park or on the train. I know I've done all of these things now.
Trying to get a baby to sleep.
Exactly. Listening. She loves IFRS. But thank you very much for joining us, Dave Walters. Happy accounting. The preceding programme was brought to you by PricewaterhouseCoopers LLP. This content is for general information purposes and is not a substitute for consultation with professional advisors.